Have you or your investment manager's views of the economics of Apple's business or its attractiveness as an investment changed since Berkshire first invested in 2016?
Everyone, let's get started. Buffett has returned to make headlines, and this one was significant. Warren Buffett is selling chunks of Apple. So by far his largest stock going into this quarter was Apple. It accounted for almost half of his stock portfolio. He has since sold 116 million Apple shares, cutting his stake by 13%. Here's what he said about it.
Given what you mentioned, there was some news that came out in the 10Q this morning. It shows that Berkshire sold another 115 million shares of Apple in this last quarter. That's Berkshire's largest holding. Have you or your investment manager's views of the economics of Apple's business or its attractiveness as an investment changed since Berkshire first invested in 2016?
No, but we have sold shares. I would say that at the end of the year, I would think it extremely likely that Apple is the largest common stock holding we have.
And the reason this interests me is that, to be honest, it raises more questions than it does answers. Although he is selling 13% of Apple, he guarantees investors that Apple will remain their top holding going forward. But here's the thing. It has been said repeatedly by Warren Buffett in the past that he is not in a spot of cutting positions. He doesn't just go around cutting a position without a good reason, though occasionally they do it in a little fashion for tax purposes and other reasons.
I looked at common stocks or marketable equities, or the things that people love to look at, as being businesses. When we own a Dairy Queen or we own whatever it may be, we look at that as a business. And when we own Coca-Cola or American Express or Apple, we look at that as a business. We have no attempt made to predict markets. We have no attempt made to pick stocks. However,
As he just pointed out, if he doesn't adjust his holdings in response to external events or market conditions, isn't that a hint that the 13% decline in Apple shares was probably caused by a business issue? Fortunately, there is more to the narrative, and Buffett does explain his decisions. What are you doing, you mysterious 93-year-old? He did, however, kind of hint later in the discussion to a few reasons for his decision to sell this significant portion of Apple stock. But first, I'd love for you to hit the subscribe and like button. It tells YouTube that you'd like to see my new videos appear on your homepage recommendations.
We own Apple, which is an even better business, and we will own, unless something really extraordinary happens, we will own Apple and American Express and Coca-Cola when Greg takes over this place. But I don't mind at all, under current conditions, building the cash position. I think when I look at the alternative of what's available in the equity markets, and I look at the composition of what's going on in the world, we find it quite attractive.
Yes, people, you heard it right here. I swear that clip does not contain any AI voice cleanup. According to statements made by Warren Buffett, he is fine with having more cash on hand right now. In the 10Q they issued earlier that day, Berkshire stated that they had a record cash balance of $188.99 billion for Q1, despite all that is going on in the world. With $189 billion in cash sitting idle, that is equivalent to the combined market cap of GM, FedEx, and Starbucks. This is rather bizarre, and a lot of speculation sprang from it, suggesting that Buffett may have inadvertently disclosed his opinion that the market won't hold up very well for the foreseeable future. Naturally, Buffett would never formally confirm or deny it, but based on his prior remarks, it would seem to make sense.
He said that he did this because he didn't mind building up the cash hoard at this point because of the environment that's taking place. I guess the economic environment, the stock outlook. I mean, I tried to pull a little more out of him later with another question, and he didn't bite on it. But what are you going to do with all that cash? Why do you need all that cash? He says he can't find good places to put it, and that makes you wonder if he thinks the entire market's overvalued.
There's a lot of assumption that Buffett predicts some stormy skies in the future. After giving it some thought, I believe there are three main reasons why Warren Buffett seems unaffected by the sale of some Apple stock and his subsequent conversion of that stock back into cash. First and foremost, achieving profits to protect against future capital gains tax increases. Second, having extra cash on hand in case huge insurance claims result from an increase in the frequency and severity of weather disasters. And third, the fact that he is comfortable with cash. In this context, he doesn't particularly mind holding cash, especially because Treasury yields are currently at about 5.5%. However, he addressed the concept of really realizing some advantages now in anticipation of a significant increase in the corporate tax rate in the most direct manner during the discussion. Take a listen to this.
One thing that may surprise you, we don't mind paying taxes at Berkshire. We are paying a 21% federal rate on the gains we're taking in Apple. And that rate was 35% not that long ago, and it's been 52% in the past. The federal government owns a part of the earnings of the business we make. They don't own the assets, but they own a percentage of the earnings. And they can change that percentage any year, and the percentage that they've decreed currently is 21%. And I would say with the present fiscal policies, I think that something has to give, and I think that higher taxes are quite likely, and if the government wants to take a greater share of your income or mine or Berkshire's, they can do it. And they may decide that someday they don't want the fiscal deficit to be this large because that has some important consequences, and they may not want to decrease spending a lot, and they may decide they'll take a larger percentage of what we earn, and we'll pay it. I would really hope with all that America's done for all of you, it shouldn't bother you that we do it, and if I'm doing it at 21% this year and we're doing it at a higher percentage later on, I don't think you'll actually mind the fact that we sold a little Apple this year.
A bit earlier in the meeting, Buffett also said, "The market isn't there to instruct you, but to serve you." That comment, in my opinion, solidifies Buffett's work with Apple. At nearly all-time highs, Warren is actively locking in part of his gains at high valuations and the 21% tax rate because he believes that whenever the government attempts to address this massive debt pile, which has increased by a few decades of growing deficits, the corporate tax rate will rise significantly. It's an extremely interesting bet because he's essentially speculating that turning that Apple stock into cash now and avoiding potentially higher tax rates, along with the cash's expected placement in short-term treasuries, will somehow beat Apple stock over the coming few months. It's incredibly fascinating. Although I'm not sure if I would place that wager myself, it indicates that Buffett does not believe that the corporate taxpayer or the stock market is in for an era of prosperity. However, Buffett believes Berkshire needs to strengthen its bank account to shield shareholders from future insurance losses, which is the second reason he is so content to lock in gains and return to cash. And while it may sound absurd, this is the case. Buffett mentioned a few times during the meeting how extreme weather events are happening more frequently and how their insurance company needs to have more money in short-term treasuries or cash on hand right now to ensure that Berkshire is never, say, completely destroyed. That's the key to keep in mind when reading these CNBC pieces regarding Buffett's $189 billion in reserves. To be honest, he has little to invest. The investable money from that pile is much lower because, as he previously stated, a sizable amount of that must remain untouchable in the event of insurance losses. It's not nearly $189 billion, but he still makes very large investments. Tens of billions of dollars could be invested. This brings us to our third and last reason for Buffett selling that Apple stock. The simple explanation is that since U.S. Treasury bonds with a short maturity date give a respectable yield, it's not a bad idea to have some money invested and earn a risk-free return. Although there isn't much to be excited about in the stock market at the moment, rolling funds through U.S. Treasuries isn't all that horrible.
You're sitting on $168 billion of cash, which you told us today is now more than $182 billion. His questions are, one, what is Buffett waiting for? And two, why not at least deploy some of it?
Well, I think that's pretty easy to answer. I don't think anybody sitting at this table has any idea of how to use it effectively, and therefore we don't use it now at 5.4%, but we wouldn't use it if it was at 1%. Don't tell the Federal Reserve that, but prefer it.
I guess you have to think of it as, what would he put new money into that gets over that hurdle of 5% T-bills.
5.4%. Yeah, you got to get more than 5% that you can earn in treasuries in a very safe environment.
In the end, Becky did a great job of summarizing Buffett's situation. Treasuries are paying, and the stock market isn't offering anything. Unlike in a situation with extremely low interest rates, it doesn't hurt as much to have cash on hand at the moment. Buffett feels quite at ease converting that Apple stock into cash and just waiting on it because he is an extremely patient investor. And that, my friends, is the reason why a significant portion of Apple shares was sold by Buffett. Please share your thoughts in the comments section below and be sure to subscribe.